Everybody's talking about the AI bubble, but are we actually in one? Well, in this video, we've put together all the best arguments that we could find for and against us being in an AI bubble, and if we are in one, what's gonna make it pop? At the end, we're even asking AI what it thinks of these arguments, so stick around for that, but let's get right into it, alright? Before we dive all the way into this, we gotta tell you, this is not financial advice. We are not telling you what to do with your money. We just want to present the best arguments on both sides of this debate. And surprisingly, there are some pretty compelling points on both sides. So let's start off with the bull case. The argument that we are not in an AI bubble, or at least not in the way that you think, or at least not yet. Now, you've probably heard people say that what's happening with AI right now feels a lot like the dot-com bubble all over again. There's endless amounts of money being thrown around for this revolutionary new technology that still hasn't changed the world, but it will one day. Now, at first glance, that sounds about right. But when you actually look closer, the two situations are really quite different. Back in the late 1990s, during the dot-com boom, the internet was new and nobody really understood it, so investors were just pouring money into anything that had the word .com in its name. It didn't even matter if the company made money or not. So you had companies like Pets.com, whose entire business was literally selling pet food online. A business that made no profit, had no real plan to become profitable, but was valued in the hundreds of millions of dollars. There were hundreds of companies like this, okay? Businesses that didn't actually use the internet in any interesting or innovative way, but simply existed on the internet. For a while, stock prices went up and everyone looked rich on paper, but for most of these companies, it was only on paper. When the investors finally realized that many of them didn't have a real foundation, the bubble burst. Thousands of companies went bankrupt almost overnight. When you look at what's happening in AI today, it's like comparing apples to oranges. This time, the money flowing into AI isn't going into some random startup with untested ideas and no real business. It's coming from some of the biggest, most established, and most profitable companies in the world. Google, Microsoft, Amazon, Meta, and others. Take a look at any of their quarterly reports and you'll see that despite spending hundreds of billions of dollars on AI, many of these companies are still posting record profits. And that is a big, big difference. These are companies worth billions of dollars in cash sitting in their bank accounts. Microsoft isn't going into debt to fund AI. Google isn't mortgaging its future to build new models. They're reinvesting profits from already successful businesses. The money being spent is real. So in that sense, the AI boom is built on much stronger financial ground than the dot-com boom ever was. Now, another reason the AI bubble might not actually be a bubble has to do with the nature of the technology itself. The internet in the late 90s was full of promise, but it wasn't yet useful for most people. You couldn't stream videos like this, or store photos on the cloud, or use Google Maps on your phone. Those things came much later. AI, on the other hand, is already useful today. Say what you will about AI-generated slop, but millions of people use AI every day, whether it's for writing, coding, image generation, or automating parts of their jobs. Even if the technology isn't perfect, it's already making a lot of tasks faster and easier. It's saving people time, and in some cases, saving companies money. And then there's the infrastructure side of things. So unlike the 90s, where startups were trying to invent entirely new systems from scratch, like building the foundation for a house, AI is being built on top of an already established foundation. We already have cloud computing, global data centers, powerful GPUs, and decades of software innovation to build on. That makes the ecosystem much more stable. So if some individual projects fail, the servers, the chips, the algorithms, the infrastructure they're built on won't disappear. And finally, it's worth remembering that the companies funding this revolution aren't desperate startups hoping for survival. No, they're trillion-dollar giants with capital, talent, and the global infrastructure to keep investing for as long as it takes. So even though AI might seem overhyped right now, that doesn't necessarily mean that it's a bubble. A bubble pops when there's no real value underneath. But in this case, there's clearly something real being built. AI might not make everyone rich overnight, and it might take a while for the true impact to really show. But that does not mean it's hollow. It might just mean that, for once, the hype is pointing towards something that actually matters. Okay, so while still being optimistic here, you know that everyone's betting on AI to change the world, but the only kind of intelligence you can fully control is always going to be your own. the bear case. Because for every reason people give to say that this isn't a bubble, there's an equally strong argument that maybe it is. So first of all, there's the fact that a lot of people are not finding AI useful. According to a recent study, around 95% of companies that have tried to integrate generative AI into their operations reported zero improvement in productivity, and some actually got worse. Only about 5% say they saw a positive return. That's an astonishing number when you think about how much money is being poured into this right now. It means that for every company successfully using AI to boost its bottom line, 19 others are wasting money trying to make AI fit where it doesn't belong. And a lot of businesses rushed into AI out of fear of being left behind. But even though it's great at generating text or code or images, that doesn't automatically solve their problems. And that's the key distinction. Usefulness isn't the same as profitability. Now, another point people are raising is that there's a massive gap between what AI was supposed to become and what it actually is right now. AI is supposed to be, well, revolutionary. It's supposed to change how everything works. People were talking about artificial general intelligence, machines that could think and reason like humans. But so far, what we've actually gotten are AI girlfriends, image generators, and video tools that are impressive, sure, but not world-changing. Take OpenAI's Sora 2, for example. It can generate beautiful, realistic, and genuinely impressive videos. But it's being used basically as a glorified meme generator. And honestly, the last thing we need right now is more short-form social media slop to scroll through. A lot of people are arguing that if this is the best these AI companies can give us, then AI is not the technological revolution it's cracked up to be. It's not solving deep structural problems in science, medicine, or education. It's not curing diseases or revolutionizing manufacturing. Even when you look at Google's new AI mode search feature, it's a similar story, okay? Look, it is better than the Google search of the olden days, sure, but it's not 100 times better, it's just barely slightly better. Which makes you wonder, if this is the technology that's supposed to change everything, why does it feel like a minor upgrade? Anyway, probably the strongest argument to be made that AI really is a bubble is that a lot of the companies leading this AI boom aren't making any money from it. When you look at companies like OpenAI, Anthropic, or even Google's AI division, almost all of them are massively unprofitable. Running large language models like ChatGPT is incredibly expensive. Every prompt takes massive amounts of computing power to process, which means massive amounts of electricity. Multiply that by millions of users every day, and that translates into massive costs, which means every time you ask ChatGPT a question, OpenAI loses money. Now, OpenAI does have a paid plan that millions of people pay for, but still it is nowhere near enough to make up the cost for running the system. They're still deep in the red. And that's the case for almost every major AI company right now, except for one, NVIDIA. Now, NVIDIA isn't building models or running chatbots. No, they're selling the GPUs and chips that power AI training and inference. So in a way, they're the ones selling the shovels during the gold rush. That creates a strange dynamic where the companies building AI products are bleeding money, while the ones supplying them the tools are booming. Which raises the question, how long can this bleeding continue? Because right now, it's being kept alive by investment. Not profit, investment. And that's where things start to look a little bit shady. Recently, there's been a growing concern about what's called round tripping, which is when companies fund each other's growth in a closed circle. So NVIDIA recently announced it would invest up to $100 billion in OpenAI to fuel its data center expansion. Almost immediately, OpenAI confirmed it would spend a huge portion of that capital to buy NVIDIA's chips. And NVIDIA counts this as pure revenue. Weird, right? But it gets even weirder, okay? OpenAI just promised AMD, another chip company, that they would buy a ton of chips from them too, and as a part of the deal, OpenAI gets 10% of AMD's stock. While Oracle, a big cloud computing company, recently cut a $30 billion deal to provide cloud services and data center capacity for OpenAI. So, Oracle gets business from OpenAI, which is funded by NVIDIA and owns a big chunk of AMD, and then gives that money back to NVIDIA and AMD for chips. Money is flowing in all directions, and on paper, everyone looks like they're growing. The problem is, it's the same money being passed around in circles, and OpenAI doesn't make any money of its own. a lot of people are arguing that this kind of behavior isn't just weird, it's dangerous. AI isn't being fueled by its own profits. It's just being fueled by investors who eventually want to see their dollars turn into more dollars. And that's just not happening right now. If the investments dry up, OpenAI stops buying NVIDIA chips. NVIDIA's growth drops. NVIDIA stops investing back in OpenAI. Oracle stops building AI data centers. And NVIDIA sells fewer GPUs, and the whole market comes crashing down. Those are the best arguments for and against the AI bubble. And look, okay, we here at ALUX, we're not saying either of them is right, and we're definitely not telling you what to do with your money. But let's just pretend for a moment that we are in an AI bubble. In that case, you're probably going to hear a lot of people throwing around the word recession. But it's not as simple as that. There's an important distinction between the AI bubble popping and that causing a recession, and a recession popping the AI bubble. So when a bubble causes a recession, it's usually because the bubble grows so big and is so inflated that when it bursts, it takes the whole economy down with it. That's what happened in 2008 when the housing market crashed. But the other scenario is the opposite. Sometimes it's not the bubble that causes the recession, but the recession that pops the bubble. When the economy slows down, investors get nervous, and they stop pouring cash into high-risk sectors like AI. The troubling thing is, based on the latest data, that second scenario might be the one that we're heading toward. According to JP Morgan, right now there are around 30 companies that are massively invested in AI, making up around 44% of the total value of the S&P 500. Think about that for a second, okay? Nearly half of the stock market's value is concentrated in just 30 companies, all of which are deeply tied to the same technology. So what happens if the economy slows down, if we hit a real recession? Well, in the past few months, there have been several reports suggesting that while the AI boom is lifting the stock market, it's also hiding how weak the rest of the economy is. In 2025, somewhere around 40% of America's real GDP growth will have come from tech companies spending money, and most of that was AI related. Without that spending, the U.S. economy would have only grown by 0.1% in the first half of 2025. So practically nothing, no growth at all. And some analysts warn that if you strip away AI-related spending, the U.S. might already be in a recession. So right now we're in a bit of a strange situation. The AI sector is so big and growing so fast that it's making the economy as a whole look good. But if the part of the economy that is not AI starts suffering too much, and that's what these reports are warning about, then we could be in for one hell of a downswing. If investors start pulling money out of AI to cover their losses in other parts of their economy, the biggest, most powerful companies in the world, Microsoft, Google, NVIDIA, Amazon, are also the ones most exposed. But smaller startups would also shut down en masse, leading to layoffs across the entire economy. The industry would shrink dramatically, leaving only a handful of massive players who could afford to keep on going. And that's kind of the irony of it all. The companies that turned AI into a bubble might also be the only ones big enough to survive it popping. But maybe that's what has to happen, because sometimes bubbles also reset things. They clear out the noise and force the real value to show through. And just like the internet, if AI really is the next great technological revolution, it'll survive the pop. It just might look very different on the other side.